Welcome to Section 1, Video 4, Theory of Technical Analysis. We're going to wrap this section up with your goal as a TTI trader. We're going to touch upon some of the things that normally wouldn't have had an opportunity for video itself. We're just going to throw them all together here. And what I really want to focus on over the next 10 to 12 minutes is what I expect of you and what you should expect of yourself when you join the trading initiative. Objectives. We're going to review some criticisms involving technical analysis specifically for us, and then we're going to set some realistic goals using technical analysis or when using technical analysis. Just so much misinformation and unrealistic goals that sometimes it can hinder our progress right from the very beginning. All right, so the first thing we're going to go over is that this is a probability-based trading system because technical analysts believe that history repeats itself and previous price action can help predict future price action. Many technical traders fall victim to overconfidence. What do I mean by that? I mean, what's one of the first chart patterns that any technical trader learns? Something like a symmetrical triangle. They think they start seeing symmetrical triangles everywhere, and they just want to buy every single symmetrical triangle. It's just not that easy, and you're going to figure that out as you go through the material in the course. But at the very beginning, think of a Dunning-Kruger curve. At the very beginning, people think that they're just so much smarter than they really are. The amount of information and stuff that they need to know to actually succeed far exceeds what they know. And so they fall victim to overconfidence, okay? So every opportunity in technical trading can be broken down into probability-based outcomes, and that's what we focus on within the trading initiative. Learning to identify fractals and price action is just the first step in many to becoming a successful technical trader. Nothing in trading, I don't care if it's fundamental, technical, sentiment, etc., is 100%. There's always a varying degree of profitability, which must be understood and expected. Everything we do from here on out will be supported through empirical, statistical evidence. Nothing will be left to chance. I cannot emphasize that enough. Nothing we do within the trading initiative and within this system is left to chance. No YOLOs, no lottos, nothing. All right? If you want to do that on your own, totally fine. That is not part of our system, though. I just want to prove a point, I guess, that nothing is for certain when we are trading. Even if something is a 90% win rate, that 10% can still hit, and it can hit multiple times. So you really need to be aware of that when you enter trades. Facebook just reported yesterday, massive move down. No idea when you're going to be watching this material, but essentially a previous $1 trillion company lost around 25% of its value. Pretty substantial. As of this morning, it is pulling down the communications sector, and a lot of the large cap growth is being hurt specifically because of Facebook's earnings. So Facebook closed at 323 on February 2nd. And immediately after the market closed, dumped over 22% to 250. So this morning it was even lower. I showed you a tweet here from a guy. I have no idea who he is, and he actually went back and said he never bought this to begin with. But this is just to show you, nothing is for certain. This guy expected GM, FB, Amazon, and Google to all beat earnings. And he said at the time that the current valuation was so cheap and that the market was looking great, and that, maybe buying some plays here for the upside off earnings was the move, and it wasn't. And I'm not calling this guy out in particular, but this sort of tweet is everywhere in every social media platform, on your TV, everything. It's not that easy. It's not this easy. This specific example is extreme. Not only did Facebook not go up, but it capitulated harder. I think this is the number one loss on the day Facebook has had in its history. So just here to show you guys that it's very easy to become overconfident in something, and it just does not have to go your way. You have to bake that in part of your risk to reward. NVIDIA is another one here. I just want to point out the chart pattern portion of this, because every trader that starts off reading charts falls victim to this. I fell victim to this. I'm sure you fell victim to this at some point. This is a falling wedge. People love trading these. They are generally speaking, viewed as a reversal pattern to the upside. Excuse me, it's very early in the morning. It's you're looking for a bullish breakout here off of a falling wedge. And as you'll see later on in the course, we'll touch upon some of the statistics behind these chart patterns. This is actually one of the worst performing chart patterns, near 50%. So very random on whether or not this thing is going to break out or break down. In this case, NVIDIA did break down. We were consolidating within a falling wedge for 80 days. Every single person had this thing charted. Every single person was trying to time the support bounce. Unfortunately, at that 260 area, it did not bounce. It capitulated, used all of those support buyers as fuel to continue the rally to the downside before finding a temporary floor there at the 210 area. So just because you can identify a chart pattern and the chart pattern is generally viewed as a bearish or bullish pattern does not mean it has to resolve in that direction. All right. Part 2, I only have to make. How many times have you heard this? Have you fallen victim? I'm sure we all have. I'm not immune to this either. When I first started trading, my goal was to make $50 to $100 a day. Imagine if I could just make $50 to $100 a day on top of my job, what I could do with my life and with that extra cash. Don't fall victim to this. Remember, the system comes first, the profits will come after. Okay, so wishful thinking and daydreaming can have a greater negative impact to your overall performance than anything else. Can you imagine why? Because if you have a goal to make $50 to $100 a day and you don't hit it, you're going to ruin your mood. You're going to take riskier trades. You're going to walk around in a cloud. Don't be that guy. This is something that is going to be challenging but should be rewarding and fun. If you're bringing the stresses of trading with you into your family life, if your friends can see it, if you're suffering in other aspects of your life because of trading, it's time to stop. And generally speaking, that's due to wishful thinking. So focus on nailing the system and the profits will come later. So wishful thinking and planning, one of the biggest flaws we see in traders and TTI, both new and experienced, is the tendency to begin planning a future based on a facade. What does that mean? It means specifically in this example that I'm thinking about, somebody will come into the group, they'll go on an insane run, they'll make 50 grand in the first month or whatever, and then they'll start thinking about quitting their job. They'll start thinking about, dang, if I could do this every single month, I could buy $1 million house in a year, or I can buy a Lambo. Just stop. You're here for the wrong reasons if that's what you want to do right off of the bat. I'm not saying you can't get there, but you're not going to get there within the first few months. This is a complicated system. It's going to take some time to get used to. So yes, we do go on some pretty crazy win streaks, but as with anything in life, most things will revert back to the mean. And as long as that mean is trending upwards, you're on the right path. Do not fall victim to planning a future based on short-term stuff, okay? You're learning a high-income skill that will allow you to take advantage of the market. It will not come overnight. It will not be easy, but it is worth it. Law of small numbers. When a sample size is small changes have a large apparent effect on the analysis of the data. What does that mean? You might have a crazy outlier of a month. You might make 50K. What happens if your normal month, you're only making 5K? Obviously, that is an outlier. And if you only have 3 months under your belt, you might think, wow, this is the new norm. It's probably not. You shouldn't discredit yourself for that month. But law of small numbers dictates that all of your data is going to be skewed to the upside. And what happens if the next month you go back to 5K? Or what happens the next month if you actually lose money that month? What happens to that 50K? Exactly. It's just not something realistic to begin building the future on. You have to gain some consistency there. Do not compare someone else's profitability to your own. The only person that you are actively working for and against is yourself. That's it. When you enter the group, you're going to see some guys posting some huge profits. You're going to see some guys posting $100 to $500 profits. Do not get caught up in what other people are posting. Focus on the system, focus on the process, focus on yourself. The only person that is going to defeat you is you. So get your biases in check. Do not fall victim to the social media bullshit of everybody becoming a millionaire overnight. It's marketing. Lastly, profits over profits. Your ability to successfully trade the market is not entirely based on your ability to be right or wrong. It kind of sounds backwards, but let's talk through it. Just like we learned in lesson 1, your ability to identify and enter a position is your only responsibility as a successful trader. That's it. You can identify everything. There's lots of analysts. I think over the last 2 years, there's this new role in a bunch of different trading discords that they have these fake stock analysts and stuff. Listen, anybody can analyze a chart if you have 5 hours and 5 years worth of data. That's not the hard part. The hard part is taking that analysis and doing something with it. If you don't enter a position within the group, I don't want to hear you or see you say, wow, I called that. I don't care. There's enough of that crap on social media, on TV, everywhere. If you don't make a play, I don't care. That's it. And I feel like that's a pretty fair thing to say. Do not take notice of social media personalities that take advantage of hindsight. If they did not trade the name, the analysis is useless. Do not become engulfed in so much bias that you are unable to view price as a product in and of itself. What does that mean? We might be incredibly bearish on something, but if a stock is showing crazy relative strength, let's just not fight it. I don't care how much bias you have. If price is not working in the direction that you expect it to work, just don't trade it or close the trade, etc. Do not become engulfed in so much bias that you're willing to blow up your account because you'd rather be right than wrong. All right. Timing the market is more important than timing the market. Everyone's heard that quote, but that's only applicable to long-term portfolio management, not anything we touch on in here. So feel free to continue to buy in regular intervals in your 401ks and stuff. I'm never going to say anything about it. I think you should do it, right? But as shorter term swing traders, timing the market is incredibly important. We went over it a few videos ago. P1 to P2, the amount of profitability you can pull out of a trend increases exponentially the earlier you can get in the trend. So timing the market is incredibly important as a shorter term swing trader. Scalping and day trading, it's even more important to time the market. You have to. That's like your number one edge because the frame that you're trading on is so slim, it's so small, right? So even with swing traders and position traders, timing the market is incredibly important. And therefore, if you identify something and take the position, feel free to let everybody know or say, I'm about to take this position if it's pre-market or after hours or whatever. But I don't want you to go back, dig through stuff 2 weeks ago and say, wow, I called this. We don't care. You're either in the trade and profiting or at the time, in a loss or whatever, that's fine. Hindsight will kill you. It will kill your momentum. It will kill your confidence. Don't do it. All right. The last thing here, you're trading business. And I think this is probably the most important. The moment you begin treating your trading system and your account like you would a business, decisions become less about immediate impacts and more about consistency and long-term profitability. Think of your trading system and account the same way a small business owner thinks about their business. Think about it. Unnecessary risk can lead to steep drawdowns in your account capital, which will hinder your ability to execute your strategy effectively. Do not, I repeat, do not take unnecessary risks and take yourself out of the game. Think of yourself as a professional poker player that lives off of their bankroll. What happens if they go broke? They go get a job back in corporate America or wherever else they were working prior to becoming a professional poker player. If you want to build this system out into a consistent profit-making machine, you need to understand that you cannot risk blowing your account up. You cannot. Now, most people do, and you might at the beginning. I did a few times when I very first started trading, and then I almost did in the middle of trading 4 or 5 years ago. But since then, I've treated my account balance like the most important thing in the world. And hopefully, while sitting with us trading, you will start to feel the same way and take less and less YOLOs, less and less lottos, and really say, why am I willing to just throw cash away? Small business can't do that. Why are you? If you aren't used to going out and spending a couple $1,000s on a random Wednesday, why are you opening up an Amazon position? Seems pretty simple. If you don't go out on a random day and drop $5,000, why are you willing to drop $5,000 on a position that for the most part is a YOLO or a lotto? It's just stupid. Don't do it. All right. That is more of a product of position sizing, which we'll go over towards the end of the course. But it's a good way to think about, how much should I be spending versus my account? Well, one of the first things we tell people is how much are you willing to spend on a random day? If it's $100, go out and find plays for $100, etc. Treat your bankroll like you would your bank account and consistently look to grow it. there you go. We already went over that. And lastly, and I think one of the things that we excel in here is pay yourself a percentage of profits regularly. What does that do? Well, one of the biggest problems that I see with newer and experienced traders, specifically guys that do make a couple dollars here and there, is that they start treating their account balance and the money that they make like a video game. It's just a number on a screen. So they're willing to take bigger risks because it doesn't really matter. It's all fake. It's fugazi because they don't ever touch it. They don't ever feel it. They don't ever spend it. So something that I preach to everybody within our group, I don't care if you make $100 a week. I don't care if you make $1 million a week. Pay yourself a percentage of those profits, 5%, 10%, whatever. Go to the ATM, pull the cash out, touch it. Know that you essentially took money out of the market and you are now able to go and spend it. Now, all of a sudden, it's real, it's tangible, it's cash. You're beginning to build wealth if that's what your goal is. Go spend it. Go buy something. Go do something with it. Now, when you sit down on Sunday night during our strategy session and you look at your account balance, it's not just a number on a screen. It's, hey, how can I take this account and increase it over the next week, be able to pay myself out again because I want a new pair of shoes. I want a new car. I want this. I want that. All of a sudden, your decision-making process becomes a lot more rigid and you stop taking those stupid, unnecessary risks that plague most beginning traders. Okay, so to summarize, show up on time. This is just a bunch of random stuff. You guys are adults. I shouldn't need to tell you this, but when we have things planned as a group, the guys that have been with me the longest, they'll DM me and be like, hey, I got something going on. Like, I don't mean to miss. No problem. I get it. Real life is real life. It comes first. But you should make this a priority if you can. All right. If it means you have to stay up a little bit later, if it means you have to miss a TV show, if it means that you have to study a little bit more, you're an adult. You paid a lot of money to be here. Please show up on time. Study the goddamn material. That's the only time I'm going to say it. If you ask me a question and you haven't studied the material, I'm going to get upset. I'm put an incredible amount of time here. I expect you guys to just study the material. If you have and you still have questions, I'm an open book. I'll be your best friend. But take the initiative, right? If you need more of something, you can ask. But please, please, please do not do that to begin with. How many times in your professional life has somebody asked you a question and in the back of your head, you're like, why can't you just Google it, right? If there's something like that, just Google it. Go figure it out. But if you really do need help, I'm here for you. Be an accountable trader. Be accountable. You are your own person. You're an adult. If you make a bad trade, no problem. Do not take other people's trades. All right. Everybody has different risks. Everybody has different reward profiles. Be accountable. Every decision that you make inside this group from here on out using our system is 100% up to you. And lastly, act like the person you want to be and you will become that person. Do not say, I am studying to become a profitable trader. Think to yourself, I am a profitable trader. What would a profitable trader do in this situation? And slowly but surely, your habits, if you've ever read Atomic Habits, you know what this is, identity-based habit building. You will eventually become a profitable trader because you will already be acting like one. All right, guys, so I appreciate you. This is the wrap up of section 1. We're actually going to get into the material now, but look back at everything we went over the last few videos. Make sure you understand it. Understand this video and the things that I expect out of you and things that the group expects out of you. And we will all become best friends and you'll be able to learn this system and use it for, realistically the rest of your life. This is not something that generally is going to be phased out. This isn't quick scalps in and outs. This is a entire market insight style of trading. And this is something that you're going to be able to use for the rest of your life. All right. So I'm excited. I appreciate you and I'll see you in the next section.